Welcome, and here we're looking at the US 30, and there's a couple of things that can be pointed out here. Is that we can see that the market was strong here, and we can see that it's struggling here, and we can see that the 15,500 here is the support, which may be broken if we're looking at the Elliott wave structure of having a fifth wave up through here. The 38.2 retracement level would be down at the 15.3 or close to it. However, the wave 4 one lesser degree is a little bit higher here. So let's see how we go. Of course, we'll need a break of the 15,500, and that's quite possible because the little move that's come down through here appears to be in 5 waves. The movement on the Dow Jones is slightly different from the S&P 500, and we'll have a look at that now. So the 1 hour chart here for the US 30, we'll have a look at this structure in here in a moment, but just considering this as wave A down through here, and we're looking for a counter trend coming back. The circle here is just the 61.8, and I might use that here on in just to highlight that, but it could be if you see, well, it could be the 38.2 or the 61.8. I'll try and figure that out, but I just want some sort of simple symbol that that we can recognize. It doesn't get too messy. But look, 61.8 is the is actually right on the, well, very close to the 72 there, the 572. So we'll be looking for an A and a B and a C up to here. Of course, if it found support on top of the 72, well, then I'd be wrong, and we would need to go to the long side from that point. There is the supply up through here, so you know this is where it sort of struggled. So it's retesting supply, and you know these are the numbers. So this movement down through here in wave C is pretty much the equality of this first wave down through here, and I've put it on a bit of an angle here too because, as I mentioned before, the wave A is normally the sharp move, and wave C is a little bit lazier. If we see this like this here, then we know that they've got the personality of a third wave in here, and we would have to label this wave 3 here, and 4 and 5 and down from that point, when they would have a larger correction from that point there. So let's see how we go with that, but just drilling into that for one moment here. This is the top here as such, and would be looking at this here as down for wave 1, back for wave 2, nice third wave here. The wave 4 here pulled back up about 50-60% of the wave 3 here, a little bit much for a wave 4, but look, it certainly didn't break any rules by having overlapping wave structures with wave 1 here, so everything's pretty sort of tickety-boo there, I guess. This wave structure down here is 5 waves, with the strongest wave in the middle here, the third wave, the 1, 2, 3, 4, 5, so that would be the 1, the 2, the 3, the ABC for the 4th here, and down for the 5th to here, or to here more likely. And here we can see the market moving to the upside in terms of the structure. I would be looking for an A, B and a C. Get my fingers on the keyboard here. I've got to hold 3 keys down to work this. So an A, a B and a C wave going back to the 61.8. So we can see here that we've got wave 1, 2, 3, 4 and 5 here for possibly the wave 1, but we're looking at it as the A wave, then the B wave down here, and because we've got 5 waves here, that means that we're going to get another 5 waves over here, and that's unfolding now. So as you can see here, we've got 1, 2, 3, 4, 5, so that would be wave 1, wave 2 here, this is all of wave 3 here. It's tiring here, isn't it? But it's the end of the session as well, so we've got to give it some grace. But looking for a wave 4 to pull back 38.2% of that wave 3 there, and then wave 5 to here, which should be the same length as this guy here or thereabouts. So this is the failure point here, and as I mentioned, you know, if it becomes really powerful here, well then you know that we're wrong, and you need to just be on the other side at that point. So retested, you know, nice retested support here for any further upside here. But anyway, let's see how we go there. Could be good selling opportunity, but even selling, you would need to confirm the selling, we would need 5 waves down, an impulse wave to the downside, so 1, 2, 3, 4, 5, then you wait for the counter trend of an A, B and C, and you want that to work against another number, some number that you know or is important, and then simply by taking that breakout through here would suffice. You can do better, but that's good. You can build positions in at different prices as well, because then you can unfold them one by one as well. So it just depends on how you trade. If I'm trading the Dow here, I like to trade it short. I use a 2-minute robo on that, and use the sub levels and a 2-minute robo, and I pretty much add on each bar. So if I've got a bar here of 2 minutes and then I want to add to that, well then I'll just add on the next one to the downside and so forth here. So I can build in quite a lot of positions quite quickly. But I just trade to the levels, and I normally just trade between the numbers 8 and 5. So 5 and, well, 8 here and 5 here, because I know the market moves quite quickly from that point. And also once the midpoint 50 has become the resistance, then I trade down to the 30. I never trade to the actual 30 because I know that there's orders sitting there, so I always trade to the number 3. So I'll trade to 33, and that's the same here coming down to the midpoint here. I wouldn't get out at the midpoint, I would get out at 53 because I know there's going to be a bounce there. I don't want to get caught in it, but that's sort of, playing a pretty tight sort of game, I guess. But you know what you know, and you do what you have to do. So the US 30, that's that. The S&P 500, I've got slightly different wave count on this, but it doesn't matter that much in terms of degrees. I just keeping track of 2 here. But look, the important thing here is that we knew that there would be a reaction. Well, we felt that there would be a reaction at the 1700. And with all corrections, we need to allow the first, move down to sort of complete, so we've got some sort of understanding of it. On the cash market, that's the high there, not that one there. So that needs to line up through there. Now, obviously, there's support at the 72 here. The way forward, one lesser degree, is around the 72, the 70 in this case. So that's where we would be sort of looking for first. We understand too that the 80 here, moving down into here, there's support all through here at the 80s, and they're above the 80s and on the 80. And I know there's support there because it didn't even come to the 80. So I know that there's orders sitting there. So, but this is a 3-wave movement here. So it's completely different from the Dow Jones as such. So we've got this 3-wave move here. So in that case, I have to look at this in terms of an A wave down as well as the 1, but an A wave to here, a B wave to here, and 5 waves for the C wave here, right to there, and then that could be the wave 4 there. Okay, so I don't know yet, because we don't know if this is finished coming down through here just yet. So this little movement up here could just be the wave 4 here coming up through here, and it could get sort of a bit complicated as wave 4s do, and then move down to wave 5 here. So if we do get that 1, 2, 3, 4 and 5 here, then we'll get a counter trend here as such coming. This is the block of supply coming in here, this sort of block here. So that's obviously going to be the resistance in here somewhere, and we'll look at this structure coming up here in finishing in 5 waves here. That would be more important than trying to work out the price here, but we know that it starts there, so that's the important point there. But if we get 5 waves here, we'll get 3 over here. Okay, and then we'd look the same thing again. We can look for short trades coming in from this point here, such as 5 waves down, 3 waves back up, looking to take that out through there. Don't get stuck on these numbers that I'm just pointing out with these things, but just I'm just doing a textbook sort of thing here. So so that's how that can sort of play out there. Obviously, this can also just push straight back up through here, because we do have this A, B and C correction here as well. So we need to be a bit mindful of that. But we also, we need to focus on that Dow Jones having 5 waves down as well. So look, we're in the first leg. We just need to allow it to complete, and we need to, because the S&P 500 and the Dow Jones have got different internal wave structures coming down, we'll need to look at some of the others, the Russell, the DJ60, which is the top 60 companies, which has got a better, more wider view than the Dow Jones 30, the DJ30. I mean, the DJ30 is not even the top 30 companies anymore. So so that's that. Yeah, that's just the S&P again. So, right, the European markets. Now, the European markets are quite strong relationship to the Australian market. If you've traded the futures on the FTSE, then you'll know that the SPY and the FTSE are very similar. Just that the FTSE's got 10 times more volume in it. Also, this particular move down through here counts quite nice as a three-wave structure here. Okay, so I haven't labelled it just yet, but what I wanted to point out here is that the bounce off here has come back up to the 61.8%. The US session's obviously closing, so it's diminishing here. But what I wanted to point out here, if this was a 5-wave structure, and that would be the wave 3 and 4 and 5 to here. If that was the case, and we were looking for a 3-wave structure back as an A and a B and a C wave here, and the C wave would have 5 waves in it, well, then there's still more to go, because when we look at this little structure here, we can see that we've got wave 1, wave 2. This is the 3rd wave all the way to here, the 4th and the 5th here. So that's just wave 1. Then we've got wave 2 coming back, and then we'd be looking up for wave 3 here. And in wave 3, we've got 1, 2, and then we've got 1, 2 here. So we're not finished there yet. So that would be the 3rd wave, the 4th wave, and the 5th wave here. And then that would just be the top of the 3rd, the 1, the 2, the 3, the 4, and then would have to have a 5 there. So it's taking us really quite high at that stage there, isn't it? So it's looking quite sort of bullish in this picture, because it's, coming back up here, because wave 5 will be the same as 1 here, and that, that's really testing these old highs up here. So that's 66.50. There will be problems here, and there would be a sell-off there if we got anyway, let's just sort of see how that plays out. But there's potential for upside here, and the reason I'm pointing that out for is because when we look at the Australian market here, it hasn't really, on the 20-minute chart here, it hasn't really moved down at all. The metals market, the precious metals came off strongly, and we'll look at that in a moment. Copper didn't come off that much, but it's completed its structure to the upside, so it has potential to the downside. Nickel and aluminium and lead and that were positive actually, so a bit of a mixed bunch there from that side of the fence. So I still don't understand this wave structure here, so I can't really give you a clean, crisp sort of thing on it, but so we just need to revert to the levels. So in terms of trading, above 5,000, we need to be positive in our viewpoint of the market, because, well, it's above the closest largest number. So drilling down in, well, not to the next degree down, which would be the medium level or the minor level, but we'll just come into the sub levels, because that's where we're working. So I can point out that in group 1 here, the 1, 2 and 3 here, while it's got support on top of group 1, the market is supported. Now the cash market and this market here, the ASXCFD, are pretty much the same in price. I think the closing on the cash was 50.39. I'll just check that while I'm here. This is CBA while we're here as well, and it's approaching its old highs up here. It hadn't had any problems with this here, so it does appear that we're going to be making new highs above these highs here. Covering this gap is the next thing on the agenda, because the wave count here is from this low here is up for 1 and back for 2, and then we've got 5 waves here for like a 3rd wave. So there will be like a reaction up here at the old highs, covering the gap as a wave 4, and then we should see a wave 5 moving up further there. So but just looking at the XJO for a moment here, 535 was the close there. So there's not much difference between this one, so you're not going to get a lead in from here. So you'd want to look at the market depth on CBA and BHP to see where the opening is going to be, and what volume is going to be supporting that direction. So that's one thing I wanted to point out too, is that on the cash market here, if the 50-30, the top of group 1 here, fails, if we get a break of that previous low, well, of the 50-30 in there, then that's a bearish bias at that point. We won't get a bearish bias on this particular market until the 50-20 is become the retested resistance here. So that would be the first inclination that there's a bearish, that group, basically if the price gets trapped in group 1 and 50-20 would be the pivot within that, that would be the pivotal point, I guess, that if that was resistance, then it's going to be sucked back into the 5,000 at that point. But while it's sitting cleanly above the group 1 there, it is positive. Okay, so you just need to work out what the drivers is going to be. As I mentioned, the metals are mixed. Not so much the gold and silver is not that important, but the copper and the nickel, are sort of more important, and those two are mixed. But the other thing too, as I just mentioned from looking at London, is that the London and the Australian market are quite close, and that's kind of positive to the upside. So there is that, even though the US is negative, London is positive. So there's quite a there's a bit of support. There's a glimmer of hope there. So support on 50-50 up here, of course, would be, would flip the whole thing to the upside. But you could use the 50-40 in here. So if you wanted to enter, so support on 50-40 as a retested support would be an opportunity for a small position to the long side, with the view of either getting out at 50 and waiting for that to become support. If that's not the case and it breaks down through here on the cash market after the 10-minute opening period, then it's down from that point there. I just also want to have a look at, I don't have BHP on this template, so we'll look at that when we look at the commodities. Okay, just starting with oil here, it seems to have panned out pretty much how we thought that it would. What we don't know now is that this move down through here being, the bias would be wave A, wave B, and wave C, okay, rather than down for 1, back for 2, and down for 3. But we'll just leave it there for a moment, and we'll just see how this moves down through here, because it's moving quite swiftly. I don't think it's finished. I think that this is a little third wave in here, so I think we've got a little series of fourth and fifth waves in here. So of course the 105 is a strong 5, being the second strongest number, can really support this market. But let's just see how it sort of prods a little bit lower through here. I just want to point out with Brent, the top in Brent is, this is a 8-hour chart. This is the wave count we've got up here so far. Looking for a wave 4 back to the 38.2 retracement. It seems to, it's been going much longer, and it's developing in a corrective pattern here. So the bias is corrective. So we'll go with that. So it's just really a matter of working out from wave B here down to wave C. You need to work out the 5-wave structure coming down through here. And I haven't had a really good look at this at the moment, but we would have to be looking at this as, I'm just wondering if this top here is part of this structure here. I don't think so. I need to pull that up. You need to pull that apart here to see if that's in 3 waves or 5 waves. If it's in 5 waves, then that's 1 and that's 2 there. And then this could be 1, 2, 3, 4, 5 to here, and then back up for 1. So down for 1, back for 2. You need to work out what's going on here a little bit. Like I say, just allow it to settle. If it gets support on 105.50, you can go along from that point. But you need to pull this apart on the 5-minute chart to see if there's another little leg down through here. And of course, this market follows stock, so refer this back to the S&P 500 or the Dow as well. And you can see here that it hasn't rallied very much in line with the Dow or the S&P 500 off their current lows. So it is probably a bias that this is a 4th wave here and a 5th wave, another low to come in through here to finish this off. But anyway, we'll keep an eye on this one. There's no sort of rush on trying to buy the low. As they say, the most expensive part of a trend is the beginning, and the end. So trying to pick bottoms and tops can be a costly affair unless you've really nailed it properly. The copper market here. Right, so what we were looking for in our last sort of conversation is a 5-wave structure up from this one here, and we're looking up for 323 to 325 here as a top, and look, it's come in and it's come off, and but it hasn't really been sold off, you know, strongly as such. So it hasn't broken down. It hasn't rejected the 320 yet. So I mean, a rejection would be, you know, trying to retest it like that, having, you know, at least having a high and a lower high as such, you know, that kind of thing, rejecting it and, you know, making new lows. It hasn't done any of that yet, you know, so it's working with the 320. So it could certainly still be working quite comfortably to the upside, and you know, more to go in here just yet. So let's just this market was down, but nickel and aluminium was, as I mentioned before, were actually positive to the upside. So with, you know, moving up higher. So let's just allow this to play out. Of course, this can follow the gold market. So if we look at the gold market here, just in the bigger picture here, I just need to explain a couple of things that we're unsure of, and we just need time to play it out. And I had mentioned it before, is that the 1350 here, or roughly here, that the move up through here as a wave 4, from wave 3 to wave 4, wave 4 can't move into the price territory of wave 1 here. It does occur in commodities, in leveraged contracts, when Elliott done his worked out his theory, his model. He did that on the Dow Jones and the transports more so than derivatives, which are highly sort of leveraged and do create overlapping wave structures. So as I mentioned before, I'm just going to leave this wave 4 in here and see how this gets treated here and how it comes off, because we were looking for you know, a little 5-wave structure within here to complete this, and it does appear to be the case. But we have broken a rule here, so let's just sort of see how we go. I mean, the other wave structure for this, of course, is that this wave 4 here comes into, well, there's a whole lot of different counts really, but this, to me, this would be the next logical one, the wave 4 here. So this would be an A wave here, a B wave here, and a C wave here, and then we've got wave 1 to here, 2 to here, 3 to here, 4 to here, and 5 to here at this point through here. But what this would make would just make a different scenario. It can make that this move here is just down for wave 1, and this is a 61.8 retracement level for wave 2, and then wave 3 to come down through here. We do still see it as bearish, so that's one of the main points there, but we'll look at more being bearish if this 72 line through here becomes the retested resistance from this point here. So yeah, let's just take a closer look. So there's a bit of iffiness around this, but what we can do is we can work with the level here, the closest largest number, which is 1300, and that's what's likely to be retested here, because we were counting our little 5 waves up through here, and now we've got that in play here. So this market does have support here at the 1300 here, there's no doubt about that, and there'll be support within this little group here as well. So once again, we need to see this first structure come down. If it's in 5 waves, if we get 5 waves down here, then we'll get 3 waves back up, and then we'll get another 5 down through here. And then at that point, it's really a matter of, does the 1300 become the resistance or the support at that point? So looking at this here just briefly on the 1 hour chart, we can see that we've got a movement down here, which we could label as wave 1 and wave 2 here, and a nice strong third wave coming down through here. So we can, that may not even be finished yet. We'll have to just have a look on a closer scale. But look, the 1, 2, 3, 4, 5, that's kind of what we're looking at. Of course, if this just stops here and finds support back up on the 1330 there, then this becomes straight away an ABC here, and support on here creates a long trade from here. Let's just zoom in on this a little bit further. we can see here that this particular move down here as wave 1 here is not really satisfying because it looks more like a 3-wave structure through here. So I just got to be a little bit mindful of that. It can be a series of 1s and 2s in terms of down for 1 here, back for 2 here of 1 degree, and then the next degree smaller can be down for 1 here and back for 2 here, and the same here. But I'm just looking at this as an A wave, a B wave in 3, and a C wave here in 5 for wave 2 here. But there still can be another degree in here. But I'll just leave it for this at the moment, and we'll look at that a bit later. We can see that this is impulsing down here quite quickly. In fact, it's we're looking at it, the trends here are actually getting larger here, so it's got momentum to the downside. Of course, these sort of sharp moves here are normally below these where stops are sitting, and they normally trigger those computer stops sitting either at the exchange or depending if it's ECN or whatever it is. So yeah, but we've got 1, 2, 3, 4, 5 down here for wave 1, back for wave 2 here, and this is all just still unfolding here. So considering this a little wave 4 to here, and this would be the wave, possibly the wave 3 in place to here. So that would leave this at a 38.2 retracement level from this little point here. So it's kind of in the ball point here. Wave 4s, as you know, can get a little bit messy. And the other good news here is that the 1320, the 20 is in group 1, isn't it? And it's the pivot within group 1. So if this 20 becomes the retested resistance in here, you need to look at this on a 5-minute chart, and you can see that it just gets locked in through here, then you can look to take that short down through to here. But be mindful that there will be a movement at a bounce off the once we made a new low here in 5 waves in here, then there'll be another bounce off here that would pull back to the 4th wave of 1 lesser degree. So that's what wave 4s do. So be wave 5 down to here, and then this would be wave 3 in brackets, wave 4 in 1 bracket, half bracket, that wave 3, 2 to here, 3 to here, 4 and 5. So it's still a bit more to unfold in this area through here. Silver's pretty much the same as well. Silver didn't make a new high here like I was expecting it to. Gold made a new high here, but silver didn't. So I'm just going to label this here for the time being as the same as gold, and I'll look at this structure, how this one here unfolds as well. You can see here that this structure is in quite a clear 3-wave structure from this high here, so that's corrective. Unless this moves down here and starts to give us an impulse wave 5 waves down, then it's positive. So even for shorting, we would still have to wait for 1, 2, 3, 4, 5 down to here, then an A and a B and a C that would sort of play out across here, and just eventually find that as the resistance there. If that's the case, then you build in a short position there, and you look for the next short position at the 72 to build into that side. But while it's above the major level, you can't short it. And if it finds support if we're wrong and it finds support on the 30, well then that's the basis to go long on from that point. So it's just really a matter of getting the just getting the timing right and allowing the structure to unfold to a certain point that you're confident that some particular number has been retested, and you can place your stop behind that number. Okay, so all of that's that. So let's have a look at FX. Okay, starting with the US dollar here, we were looking for a bounce off the 82 yesterday, and the day before, and it seems to be coming off quite nicely. I think that this is like the low in here, even though this looks a little bit lowish here, but it does present a nice little 5-wave structure there. So we'll just keep that in mind as a wave 1 or an A wave to here. And then we can see that we're building in an impulsive wave to the upside here. So as long as the this hasn't, the top of group 1, the 30 hasn't been retested as support yet. It's doing that now. But as long as the market stays above the 82.20, the pivot within group 1, this market can push higher from here. So just keep an eye on that. But that would also create the turning point for the euro as well. So if we have a look at the euro here. Now, I just want to look at it on the 20-minute chart. A top can be in play here, but what we've got so far is that we've only got 3 waves to the downside. We don't have an impulse wave to the downside. We don't have 1, 2, 3, 4, and 5. We don't have that structure yet. We only have this 3-wave structure here. Yes, it can turn into 5 waves. That's true, and it'll probably be the case as well. But it's not there yet, because once we get the 5 waves here, then we'll get the 3-wave counter trend, won't we? We'll get the A, the B, and the C here. And if that's the case, then once the market moves down across this one here, that creates the A, B, C here, and then we can short from that point. We can short from this point here as well, and go down there, because this way we've got the confirmation, because we get 5 waves here. That means we're going to get another 5 waves over here, and we'd trade it after the counter trend here. So it can be a trap here as well, in terms of well, you know, you can, if this starts to move down through here and it gets a second retest, is always nice if you can get them. So this is the first retest here. If you can get like a second one to come into play and then take the low out, that's always really, that's just makes life so much easier. But somehow you want to build some positions into here if you get this picture here, and then at the 72 there as well. But be mindful at this stage, until this low's taken out here, we don't have a 5-wave structure to the downside, so we're at risk. So it could move down to here, bounce off the 80, and then move back up through here. So that's a thing. So you need to watch the US dollar on that scenario. So not a setup yet, but possibly. I mean, I wouldn't really go long unless I had support up here again on top of group 1. The Australian dollar may have the wave 4 completed now, so I was looking for it up at the 95, and look, it could certainly sort of move up there as well. If this 91 here becomes the retested resistance, I know that's quite low, that would be below the 61.8 retracement level. From that point there to that point there, the 61.8 is sort of where it is now. So if the 91 became the retested resistance, then we can start looking at 88 from that point there. So there is a reasonable chance that this A, B, and C here can be completed. I just don't know. Wave 4s are a little bit sort of tricky, but so we need to use a bit of common sense here as well. So what we can see, just sort of drilling in here on the 4-hour chart, is that the market's trapped within group 1. That's pretty obvious in 1, 2, and 3 here. So that makes the pivot here more interesting, and we need to be able to see that as support or resistance, and that's not really going to play out for another session or two just yet, but that's what we'd be looking for. That's what you need to look for. You need to look for this as support or resistance, and it is the balance line in here, so it will dictate a further upside or a further downside. But looking at this structure in here at the moment, because if that's the wave 4 here, then we need to start seeing an impulse wave to the downside, the 5-wave structure to the downside. So let's just go in and have a closer look at that here. So this move that's come down through here so far is at the 60% retracement level of that move up from 90 up to here. Okay, so if the market was counted as such, from here we've got a reasonable 5-wave structure here. So I'm just looking at both sides. I have to look at both sides all the time. I don't want to sort of sell myself on my own opinions. I need to continually look at all sides of the market, and and that's that. So look, that's, if this was going to come down, that's where it would come to, and that's where it has come to. But what we can see here is it does appear that we've got a 5-wave structure here, and if that's the case, then after 5 waves we get a counter trend, don't we? And that other little circle up here is the 61.8 retracement level back up into the sort of first levels of supply. Well, supply would start from here into here, so it can be anywhere in here. That's either the 40% or the 60% within there. So we need to sort of work with this a little bit. As I mentioned before, if the market comes down and finds the 91 here as resistance, then we've really breached all of this, and it's bearish at that stage. So I think that's sort of interesting. But drilling down further into this move that we've got, this bounce that we've got off the the 50-60% retracement level, appears positive to the upside here, because it's got this wave 1 to here, wave 2 to here, this is all of wave 3 to here, wave 4 to here, and wave 5 to here. So in here we're seeing a little sort of A, B and C correction in here, and that would dictate further upside from this point here. So once the group 2 here, if group 2 can hold the market, and starting with 91.65, if it can find support in here, then you're on your way. But then it's safer to have that support on the 72 there, of course, as always. So building in the trade on the 72 and on the 80 is the way to go, taking some profit at the 90 because there'll be a headache there, and the rest before you get to 92, you get out, and then you wait, you wait for the reaction and so forth. So if there's going to be a move up through here, and it does appear to be the case, because it does appear we've got a little 5-wave structure here, but as I mentioned, that would be the simple A, B and C, the A wave, the B wave unfolding now, and the C wave up through here. So they will have some sort of equality into it. And if the C wave here, you can see that if it moves a bit on more of an angle, like over here, becomes a lazier angle than this one here, then you know that it's weak. If the angle is more upright, well, the stronger it is, of course. It's just a very simple way to understand the personality of things. But there will be, from this point to this point is going to reflect back over here. So it'll be interesting to see what the structure is up through here. Alrighty, well, that's it. So good morning, good luck, and enjoy the day ahead.